All right. Some interesting things I think you guys might be interested in to look over today. One, I just kind of touched on this topic. We started off Sunday's webinar with members. We kind of started off the webinar in this way. I want to put out there very quickly, and you guys know, but it's always, I find it always helpful to understand exactly what's going on out there right now, like putting things into perspective, right? We're going into an important Fed meeting, right? I don't want to say the biggest meeting. We seem to say that every time, but there are a lot of eyeballs on this Fed meeting. Not, again, we know it's a lock that he's going to raise it 25 basis points, right? We know that. That's not the issue. The issue is not only the rhetoric, but kind of the game plan with the balance sheet and all that, right? If you guys remember, there was, I think it was the Fed minutes. It wasn't even a meeting. It was expected to be a nothing burger, like no big changes. Everybody thought it was based on the past tense. We already knew kind of what was going on. And they snuck into those minutes the running off the balance sheet, a little rhetoric regarding that. And that's when shit hit the fan, if you guys remember. That's when things really started to turn south for most risk assets, right? So I think who's on mute? No, I'm talking. I've been talking to a few people here. Can you guys hear me okay? I'm not talking to myself here. I've been talking back and forth with a couple guys. Oh, okay. Just to make sure. All right. So the balance sheet is the most important thing, in my opinion. Okay. And based on market reaction and market price action in the past, like I said, a lot of eyeballs, a lot of ears are going to be glued to the screen. Answering questions, any sort of thing that has to do in that regard, okay? But just to put things, again, lining up into perspective in how we go into this Fed meeting, okay? This is the first time I think the Fed was ever expected to not only raise rates, but possibly take a hawkish approach, a hawkish view, looking to tighten as opposed to cutting rates and loosen with a VIX above wherever it is, right? 28, 30, right? Usually when they're looking to tighten, right, the VIX is usually down at low levels, or usually when they're looking to cut rates, it's usually the VIX is elevated as it is, right? So this is brand new, right? Anybody who tells you they have an idea of how things are going to play out here, they're full of shit, because there is no playbook. I think that's the most interesting thing about tomorrow, right? There is no track record. There is no playbook, okay? And not only that, okay? So we got a Fed looking to raise rates into elevated volatility, right? That's one. Another thing that all of us, and the majority of you, guaranteed, the majority of you traders trading over the last few years are not used to. We have a Fed that is on the other team, right? So we're so used to the Fed bailing the market out, bailing risk assets out when they get into some sort of trouble, when volatility starts to elevate, right? If you stop and think about what's going on in this market, we almost feel like suckers if we're trying to buy the dip in a sense. But I'll explain why we can't feel that way, okay? But the old adage, don't fight the Fed, right? Throughout this whole decade, or post 2008, you lived and died by a slogan in this market, and you found a way to make a good amount of money, right? Do not fight the Fed, okay? And ultimately, if you bought every dip, you knew the Fed put was there, you got bailed out and you made a shitload of money, okay? Now, right, if you're going to go by that same live and die slogan of not fighting the Fed, okay, the Fed's on the other side, meaning the Fed is purposely trying to cool things off. Like, I don't think we all got a grasp on that right there, right? As simple as it is to understand and as simple as it sounds, I don't think we all got a grasp on it. The Fed, right? We talk about rigged markets and we joke around how the market's been rigged, right? Buy the dip, market's rigged, it's going up, Fed put. The Fed is purposely trying to cool things off. Okay, they need to cool things off. All right, they cannot have the market or risk assets rattle off new highs and start a melt up from here. Right, that would be the worst case scenario for them. And what would that mean? They would have to get even more aggressive, right, and raise rates even more aggressively into it and tighten the balance sheet even more aggressively into it. Okay, so, you know, we spoke about like McElliott had the grit for us option players, had one of the best analogies in regards to this. We talk about the Fed put all the time. This is the Fed actually selling calls into this environment, meaning that every time the market tries to rally and attempts to find some follow through and some footing, the Fed is there to cap things, right? Instead of the Fed put selling calls, the Fed is there to cap the upside because it cannot let things heat up, which is interesting. So again, if you're looking for, if you're looking to find the bottom here, if you're looking for to get long, or if you're looking, or you think people are too bearish, even myself, the contrarian in me, we quickly forget how this game is kind of, I don't know if I want to use the term rigged, but it's kind of rigged the other way right now. And we have to acknowledge that. Okay, we have to acknowledge that. And that's why I think you have a lot of people who think Powell, it's impossible to foresee. Like, I can't believe it. I won't believe it till I actually see it. But people think like Powell has got a shot of being an all-out hawk tomorrow, because he needs to be. All right, he needs to be. And that Fed put that normally would be right around the corner at this point in time is not there anymore, right? Because it can't be, right? They need to cool things off. So that's what makes tomorrow's meeting so interesting. And again, I think the craziest point, not to repeat myself, is that this is all new. This has never happened before. Like, no, you can't speak to anybody and they give you an opinion on what, based on history or, how this may play out. There really is nobody who has any idea. And that's what, I think fascinates a lot of people out there right now. All right. So we got, if you're a bull, right now you got everything lined up against you, right? You got everything lined up against you. Okay. And we didn't even get into geopolitics or anything else. Okay. But you have the first and foremost, the game rigged, possibly the other way against you, right? Where upside is capped. You have a Fed raising rates for the first time into elevated volatility. Okay. You have already the credit markets starting to show cracks. Okay. Meaning credit spreads are starting to widen. Again, we've seen worse in the credit markets. Okay. But without a doubt, anybody who follows these credit markets are starting to set, we see with our own eyes, they're starting to say they're cracks. No doubt about it. You look at charts, look at some of these high yield charts, they just don't look healthy, right? That's not a healthy look right there. All right, so this is the junk high yield bond ETF, right? You got the LQD, LQD. Look at that menagerie. And then obviously the high yield. Right? Those are the three a lot of people look at. Disasters. Okay? And like I said, you got spreads have been widening, getting close to approaching levels where the Fed usually steps in. We're not there yet, quite there yet, but usually where the Fed would step in and be accommodative to the markets, okay? Supposedly they can't do it this go around. Again, really interesting to see how that plays out, okay? So you have that. You have Putin invades Russia. Russia invades Ukraine, okay? All the sanctions put on there, setting things into tailspin. Nobody knows these unintended consequences of what goes on, right? Global assets across the world. Nobody knows what's tied or affected by anything. We'll see, right? You got Russia, whether they're going to pay on their bonds tomorrow. I think that comes out tomorrow. I don't know if we get an answer or not, right? So all sorts of shit that we don't know comes out of that, right? You have food shortages, all the problems we had from COVID that had a big effect on creating inflation, right? We're starting to see that all over again because of what's going on. So you have an all-out shit show. All seriousness aside, you got an all-out shit show, okay? And if you're wondering why, again, this is my take, all right? So you could say he don't know shit and just ignore it. But if you're wondering why this market hasn't just fell apart here, okay, I think it's because everybody sees it. Everybody knows it, right? So what happens is when you get into these period of times where the downside is obvious, right? Everything's so bearish, it's obvious, okay? Usually what happens is you get these contrarian squeezes, right? Where they run over the shorts, they wear them out, they spit them up, and then the market rolls over. Okay, you get kind of even this, right? Which a lot of us, got long and played tactically at the least anyway, this, right? So everyone gets all bared up here, thinking this thing is going straight south, and then you get this that just wears them out, right? And then makes a new low, okay? You got, shit is so bearish out there right now, right? So bearish that we can't even get that. Well, we haven't got that yet. Okay, now, if tomorrow you have a pretty important aspect of this whole, how I lined it up, right? You have the Fed and Powell. We'll see if God forbid, he's more dovish than expected or anything like that. Then you can possibly get that tactical snapback squeeze that wipes out those shorts, right? See, what the bears never tell you is, the bears will never tell you how difficult it is to sit and stay short, okay? It's the most difficult effing thing in creation, okay? To sit through this with a size short position, waiting for downside, okay? This pain. And you guys know, sometimes the pain is even worse than this, more violent or lasts longer. So the most difficult thing that I can possibly think of in this game. Yeah, you're right, though. As soon as they see green, sometimes they take it off the table, and they're smart for doing that because it's so difficult, right? But you're right. You're right. Okay? But the point I'm trying to make is tomorrow is one of the binary events, one of the catalysts that could potentially, we can get that squeeze to, kind of up here, maybe even higher. We're still in a downtrend. We could be still in the bear market. But all its job is to wear out shorts, reel in some bulls, level off the positioning in the playing field. Mission accomplished. Okay. But again, that's saying if you get some, you get a dovish tilt out of Powell and the Fed tomorrow. Okay. What happens if you don't and it's hawkish and the credit markets really crack. You know what I mean? Like, you have a really interesting time. And I think what I'm getting at is, I think that's why this thing is really having a difficult time in squeezing from here. Because every time we're up and we get a rally, right? And those of you who are members who've started following it even recently know what I'm talking about. You get credit spreads start to widen, and then you got no shot of equities going higher into that. You understand? You're not going to have credit spreads widen and equities buck the trend and go higher. You know, exactly. The algos come in and they just start selling everything based off that. And that's what happened yesterday, if you guys remember. Remember, we had that rally, and then all of a sudden, you know, credit started to fall apart, deteriorate, and then you had just algos, you know, sell everything and drive the market lower and didn't stop throughout the whole afternoon. You're right. And we didn't even talk about the tape bombs out there, right? The headlines that you have to dodge. Okay. So, you know, it's a crazy backdrop right now. It's a crazy backdrop. Okay. But it's one of those times that where things are just so bearish. You know, things are so bearish that sometimes you can look at the glass half full and take a contrarian approach. The problem is, for me, outside of a tactical squeeze, okay, when you see things this bearish, you want to see capitulation. You understand? You want to see people, investors, players throw in the towel and give up. That's what you want to see when you see this type of negative backdrop, okay? And we haven't seen that. We're seeing bearish sentiment, okay? But it's more of that bearish tactical sentiment that if you play off of strictly in bear markets, you can get your ass handed to you. You know, in uptrends, you know, those indicators, those sentiment readings, they're like crystal ball shit, okay? But when you get into bear markets where there are bigger things at play, right, like credit, you know, you can't rely on those basic tactical indicators, you know, because again, this is something that a lot of people, a lot of players out there are not familiar with and are going to rely on the credit markets to take the lead kind of thing and react accordingly. All right. But I just wanted to paint kind of give you a mental picture of what's going on here as we go into the Fed, right? I can give you a bearish bullet list from here to Chicago, one after the other, reasons why this market should crack, legitimate reasons why this market should crack. Okay. And then why aren't we, and those are the reasons we're not cracking, as silly as it may sound. All the reasons I'm telling you it should crack, those are the reasons it's not cracking and it's actually holding here. Okay. But at the same time, where we should see a squeeze, okay, we're not seeing that. It's almost like a buyer strike out there. You're not seeing buyers who usually would come in here and squeeze these bears because they know, like, you got a binary event, right? You got a lot of binary events out there. You got the war, you got the Fed tomorrow, right? And then you got credit markets that really rule the earth right now. So it's just a really, really interesting time, And I think we spoke about this the last week. I know, like, even members, they get fed up when there's not enough action, not enough stuff to play. You know, if I didn't have the experience I had, right, and the confidence in looking at certain things I look at, right, if I was newer to the game and you agree with what I'm telling you, how it's a difficult backdrop right now, okay? Just as hard, I think, on the short side as the long side. The smart move is to just move to the sidelines. You know what I mean? Just take it easy, move to the sidelines. If you can't control yourself and you're killing yourself over trading, or you're trading too big of size, you have to move to the sidelines and get out of the way. You know, these are not the markets where you size up and make a lot of money. You can, don't get me wrong, the moves are big enough where you can make a lot of money, but you can also get walloped in a snap of a finger. Okay, in the snap of a finger. And I can tell you from experience when this is over, okay? And I don't care. If I ask 5 of you, you probably tell me we're in a bear market for the next 5 years, right? If I ask the next 5, well, we've seen the lows already. It doesn't even matter. I have no idea, okay? And I know you guys have no idea either. But I know when this is over, okay, that is going to be the best time. You go from the worst time to the best time to make money on the long side. Okay, usually that time comes where people have been hit over the head way too much and have no interest in trying to make money anymore because they're either out of money or they've been lumped up so bad that they can't even see straight. Okay, but that is exactly when, that period of time, right, is exactly when it's the single best time and the easiest time to make money on the long side, right? And we call them, right, we call that crowd that doesn't get involved in that period of time the non-believer crowd, right? Because they got so screwed during this period on the long and the short side that any rally, okay, when it's real, they don't trust. They don't want to believe in it, right? Because they've been burnt already so many times throughout this process. All right, so they force themselves to not believe in it. And that's when things are at, that's when the risk reward is at its best in this game. All right, so you got to understand it's a difficult period, okay? But I just painted the backdrop for you, and I try to do as best I can in simple English without getting too, market mumbo jumbo on you. All right, but in my opinion, that's exactly why we can't break down, right? Because everybody sees how bearish it is, and there's bearish sentiment out there. You look across the board, there are tons of sentiment readings that are at bearish extreme. Okay, no capitulation, but bearish extreme. We're going to look together. We're going to look at. I want to breeze through some of the. I don't know if you guys saw the global fund manager survey. Did you guys see that today? Did you guys see that this morning? I mean, everybody's talking about it. You got some readings there. Okay, and this is global now, right? Fund managers. Since that we haven't seen since Lehman days. That's how bearish some of these readings are. That's how bearish some of these readings are. All right, so that's my opinion. That's why we're not spiraling lower, even though you can make a legitimate reason for easily at being at lower levels. All right, and I think things are just. They're so bearish, right, that we can't even get a squeeze out of here to squeeze out some of those bears like we normally do. And we may get that tomorrow. By the way, is anybody, well, yeah, see, that's the answer. The answer to all this, right? So again, some of you aren't members. It's as good as me talking Yiddish sometimes. But for me, right, it's basically come down to 2 things, right? If I didn't have 2 things to rely on, I would move to the sidelines and not even have an interest in trying to catch anything remotely close to the low and just wait for things to look constructive again. Wait for the flow to look constructive. Wait for the price action in names to look constructive, right? Instead of new lows, you start to see names that have been suffering start to make higher lows and see some constructive dip buying in the flow rather than put sweepers, okay? So the 2 things that I'm relying on, and again, you members know because we talk about it all the time, all right, is 1, capitulation, right? That's one of the things. that would get me to get in the middle of this mess, this menagerie, and attempt even trying to look at positioning on the long side. All right. Why? Because this is what capitulation looks like. Okay. And usually the two things I'm looking for, 1 and 2, usually show up together. Okay. But this is what capitulation looks like. So, you know, in an example like we're in right now. Okay. So here. Very similar. Very similar. Okay. Again, not exacts, but very similar setup in late 2018 to what we have now. Okay. You had the whoosh where the markets rolled over, right? You had enough bears to where they needed to wear them out, right? Like we talk about, they needed to level out the positioning out there. People were too bearish. They're not going to pay everybody on the downside in the market. It's just not going to happen. Okay. And you get a couple of squeezes here, a couple of squeezes here, right? And then you get to this predicament, right? So right now here, back in late 2018, you basically were at the same spot you were at here. Okay. A lot of bulls tried to catch some trades in here. They failed. They made some money. They failed. But right here, okay, people were pretty bared up right here. Okay, because a lot of people were thinking the market was just going to go right back to highs again, right? Santa rally we were hearing at the time, the whole 9 yards. Okay, so instead the market got stuck, right? Doesn't it resemble now? Kind of stuck here. Okay, so again, don't look at the downside yet. This is what it looked like. Okay, this is what it looked like. And, you know, we go into the holiday season, light volume, low liquidity. Have you heard that before these days? Right? Everyone's talking about how bad the liquidity is out there right now. Okay. Low volume, light liquidity, nobody around, everybody away from their desk for the holiday. All of a sudden, the credit markets start to crack. Okay. At the time, Powell was looking to tighten. Remember, he was running off the balance sheet. Okay. It was on autopilot. You won't even feel it, he told us. It's on autopilot. The market gods didn't like that. Okay. And they were going to make him feel it to change his mind. Okay. He was stubborn. He wanted to stay hawkish. The market forced his hand. And the only way the market could force his hand is by this, right? Okay. So here, this was capitulation. Okay. This market broke down from here. Every bull that had their last hope by this time here threw in the towel. You saw every signal of capitulation show up, put the calls, spikes, equity put the call spikes over 1. Everything we would look at for signs of capitulation were there. Okay. And even the other thing, which is where was going to be my other example I was going to show you, the smart money showing up and stepping into the market when nobody else was. Okay. But this is what capitulation looks like. Okay. So picture where we're at now. All right. Here's where we're at now. Okay. But we're looking for a possible squeeze out of Powell tomorrow. Powell comes in all feathered up in a beak and is as hawkish as the Atlanta basketball team. How do you like that? You like that wittiness? Come on. The Atlanta basketball team. Right off the top of my dome. Boom. You like that? All right. So he comes in hawkish, right? Because he has to be, inflation, blah, blah, blah. And, you know, the credit markets start to crack, implode. You got Putin threatening to take over Poland. Who knows? Nuclear world war, blah, blah, blah. And you get this, right? I mean, you could see it. You could see it. All right. But more than likely, if this happens to us from this point, there's going to be capitulation that comes out of it. You guys agree? Right? Like if things really rolled over and the credit markets really started to get bad, and we're going to hear all the same things again. Oh, the Fed don't have our back. They can't do anything. You're going to hear the same things we hear over and over again. But once the credit markets really start to implode, the Fed can talk all they want, as tough as they want. They'll be right there, and you'll get the Fed pivot. You know what I mean? You'll get the Fed pivot. But that's what's interesting. That's what is fascinating about where we're at right now. Okay, I think this is exactly where we're at. We're potentially, okay, potentially, because I could also see something like this. So this would be the bullish case, I think. Something sort of like this or like this. But it's going to be really difficult to get this if these credit spreads continue to widen. You're not going to get this. What? No, markets in turmoil? Oh, I thought you said they're back. We'll be back. You're right. Oh, Reza, this market does it all the time that way. All the time. Just when people start to really make some real money, and retire, and it always pulls the rug from you. Always. So again, guys, that's what I see. Okay. If you're more, you're interested in rolling the dice, even in a small way, ahead of the Fed, just because you think, the reward's there. If you do get a squeeze, options is not a bad way to do it. You can manage your risk perfectly. Okay. I can see that. But, definitely not. You don't want to get potentially in front of this in any size. You know what I mean? That's what you want to try to avoid, right? If you can. So I think that's the risk. That's what's kept me pretty much on the sidelines here recently, and trying to be patient and just wait it out. I don't know how long it'll take. I don't know when it's going to show up, but I know when you get into these type of climates, into these environments, it usually, when it does end, some of those things are always around, And the other thing is Sharpies. Probably half of the people on this webinar don't even know what I'm talking about. But in simple English, the more conservative money, the smarter money out there, getting aggressive and taking on risk on the long side, right? Which is unusual for them. That's the only other thing that would have me jump and get in front of this shark. You know what I mean? Otherwise, I'll just sit tight. Now, don't get me wrong. If tomorrow I can catch a squeeze somehow, I played a little today. I didn't have anything to get excited about. Made a little money today on the squeeze, but I'm not really playing aggressively here. I'm not really playing aggressively here. I'm trying to bide my time. If I can make a little money by doing it, stay patient and getting ready to fire when the time comes. But I'm definitely going to try to catch some intraday squeezes when sentiment's this bad. 3 months. What do you mean? Oh, yeah, I agree. He's right. Yeah, you get, like Riz is saying, you get 3 really good months. Like, you think of this, right? And you guys will realize that the longer you're in this game, you'll realize that. Okay. Like when you first get into this game, you look at an uptrend like this and you want to make money the whole way up and size the same way the whole way up. But what you don't realize is when you get caught, you're going to give it all back and then some. It never ends. I promise you, I've been there. I've been through it. It never ends. You're going to make money every time. Your account's going to be up 2,000%. And then you're going to get caught with a basket and you're going to give it all back and then some. And you're lucky if you didn't blow yourself up. right? But what you'll realize over time and experience in this game is what Reese is saying. If you are patient and you sit patiently, wait, and be disciplined, and you catch this, right? Just this, and you hit it the right way, and you're ready for it, that's all you need, right? That's all you need. You can play conservatively from this point on, slap people 5, let them make all the money they want, okay? Because in the back of your head, eventually they're going to get caught if they're just as aggressive all the way up. But this is where all the meat is. And that's why these are like, the Sharpies, commercial hedgers, where do they stay unhedged, right? Here's the period where they had no hedges on. And as the market continues higher, what do? They continue to add hedges, right? The higher it goes, it doesn't bother them. They just keep putting hedges on. Exactly. What's that do? That allows them to keep all the meat they made, they keep. But that's the difference between the pros and, the retail crowd out there. The retail crowd, they never think about the risk. They always think about the upside, the money they can make. But they never think about what's the final chapter. What happens when shit starts to roll over? Like, how do you dodge that? You can't rely on being Houdini and getting lucky and just being out of everything when the market finally tops. It's not an easy thing to do. So you guys will realize, like, you want to hang around for this period of time, and that's where you want to be most aggressive in here. If hedges are hedged, are they losing money on the way up? No, they're just hedged. See, KS, their job is to hedge positions. That's why they're called hedgers. Their job is to be hedged. And now they play around with those hedges at different points in time, according to market conditions, etc., right? To manage risk. Now, most of the time, when they remove all their hedges and, like we like to call them, naked, they're doing it for a reason. Because usually they're the only ones that are taking any risk at that point. You understand? But when everybody is slapping 5 and talking about how much money they're making and jarring their farts and trolling how the Sharpies are wrong, they missed upside, blah, 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 they're fully hedged. They're fully hedged. Because like Reese is saying, this is what they focus on. Bink, bink. This is where they make all their money. And then, they spend the rest of the time protecting their positions. So Sharpies now just started to remove some hedges. They're not, if they were there, I probably would have canceled this webinar and we would have been working. Sharpies right now are hedged, but they've removed some of their hedges. So there's some promising signs. All right, let's look at, we were looking at this. Look, sign of the times. I was looking at the Zero Hedge article. Bunkers. You think I crack jokes about the bunkers, right? We're the only ones not getting our bunkers ready. Look, bunker down. Switzerland prepared for the big one. They're getting ready. They're getting ready, guys. All right. Let's see. We could talk about McElliott if you want. Hold on. How do here, my legs. Yeah, Europe, by the way, the DAX had a really nice bounce from that crash low, which was impressive. Look at this. Nice little bounce there off that crash low. Like this could have been capitulation in Europe, right? What do you guys think? It looked like from the fund flow, right? Yeah, the fund flow was insane. Insane. So that's what capitulation looks like. Oh, Hong Kong, what a disaster. Those Asian markets, man. Woo. They're rough. All right, so here is I don't know if you guys saw it, the global fund manager thing. Look at some of these readings here. Hold on. That's, where am I going? So I got better charts here too. While you guys are looking at it, I'll post them onto it. Hold on. I was supposed to do it before the webinar. I forgot again. Hold on. But like everything's lined up. All we need is Sharpies or capitulation, and everything else is there. Everything else is pretty much there. Hold on, I'm adding some charts onto here. Hold on. You got a lot of pessimism, you got a lot of bearishness, but you don't have people giving up. That's what you don't have. And that's what capitulation is. So this is global. Again, this is global. This is not just here. So maybe this is why it looks even worse. Global growth pessimism. Look where that thing is. So that's net percentage of people expecting a stronger economy. Pretty much nobody. Global growth pessimism suggests drop in ISM. You got to see some of these readings. Like this is profit expectations slumped the lowest since COVID. Look at that. Now over 60% think we're late cycle. They thought we were early cycle a couple of weeks ago. Stagflation expectations surpass boom expectations. Everybody's thinking stagflation. Again, for good reason, guys. I mean, for good reason, right? Not much to be bullish about out there. Investors are bullish cash and commodities. Look at this. Okay, cash and commodities. Europe, obviously, look at this. They hate Europe. That's why we're saying capitulation. See that? Down here, massive rotation from banks and consumer discretionary tech stables utility. What's this? I want to look at this. This is what? Chart shows investor. Oh, month over month changes. Month over month. Oops. This is rotation. Hedge fund equity exposure, lowest since April 20. That's COVID, right? That's hedge funds, global hedge funds. 60% of investors now expect an equity bear market. Long oil, the most crowded trade, surpassing tech. Long oil commodities. Russia, Ukraine, the biggest tail risk. Investors expect oil to outperform in 2022. How quick the times have changed, huh? Oil the dog. All of a sudden, turns into the stud. Look at poor Bitcoin. I don't believe it. Look at this. Would you think inflationary concerns, if I would have told you 6 months ago that Bitcoin would be here? No way, right? No way. Nobody would have thought that. Investors think the Fed put Exactly. Investors think the Fed put for the S&P 500 is now 3,600. Wow, did that drop? Well, they thought it was what? 4,000, right? I think the last time or something. I think it was 4,200 or 4,000. So now 3,600. They think the Fed put. Wait. Oh yeah. Most bullish on large caps. That's usual in times like this. Investors now more. Look at this value they threw in the trash can too now. Remember they flew to Hartnett. I was just going to ask that, T. Hartnett 3,800. Investors throw value in the trash can. Here is the largest tail risk. Russia, Ukraine took over inflation. And this is the most crowded trade. Commodities was up here once before, I think for a week, and then they corrected. You remember that? When commodities got hot? When was that? Last summer, I think? It was up here once before. It lasted not even a week. Where are the charts I just added? Hold on. Oh, I got to reset probably. Yep, here it is. All right, so these are the ones I just added here. Investors expecting a stronger economy. Look at this dive. Like that, that's lower than COVID. That's 2008. Nuts, huh? Look how quick that happened, though. Look at this. That happened fast, guys. Yeah, seriously. That happened quick. What level of risk do you think you're currently taking? I like this one. Okay. What level of risk are you currently taking in your investments? Remember this? That feels like 2 weeks ago. Yep. Look at this. Total washout. Total washout. Net percentage say they are overweight equities. Okay. I had to take a double take because I was like, wow, this is actually the opposite. It's down here. So you look here, very rarely does it stay down here and flip negative. You know, COVID crash. Oh no, this is 2008. Where was the COVID? Oh, COVID's here. I thought it was worse than COVID. That's 2008, the debacle. So we're all the way down here right now. Percentage say that they are overweight cash. Okay. You had here, nobody wanted cash. Now everybody wants to be in cash. Right? You got some crazy shit over here. No? I told you guys it was crazy. Ooh. Global sector allocation. I think this is bigger picture stuff here. Pharma, energy, materials, staples, banks. Really just pharma and energy. They're long. Everything else is peanuts. Oh, here I wanted to show you guys tech. So it actually switched back to here this month. Now I was look through back history, right? Oh, you had 08. This was 08. This looks like 2005 at some point. I don't remember that. And this is post 2000 bubble. So you spent some time here, 2003. This was that small cap rally. Remember I was telling you guys, members, remember I was telling you this period of time where if you started to talk to me about a tech stock, I punched you in the face. I wanted nothing to do with it. Like tech was like energy was before it got hot, like do not trade list this period of time for a lot of us. So you don't really spend too much time here, but a lot of people making the case that we might end up going back into a period like that. But that's pretty nuts. What's this? Oh, this is energy. Doesn't look too bad, right? Oh, no, I did not. Oh. Yes, I did. Where'd it go? Here it is. This is energy, overweight energy. That doesn't look too full. So look. Here's what I was telling you guys. Trey, remember we were talking about this? Look. Could you even imagine it? Could you picture it a year ago, right, Trey, where energy was the worst thing, uninvestable? That's what it was. And then you went into a period like this, and look at this. This is like tech, how they treat it. I mean, look at the sector. Look at it, leadership, right? And then topped out, and then yeah, sit through that. Sit through that. Why don't you? Oh yeah, I'm gonna buy the dip in energy. Hold on to new highs. Whoop! I'm gonna buy the dip. I'm gonna buy more on the dip. I'm gonna buy more on the dip. I'm gonna buy more on the dip. Dead. God, that's scary. That's scary. I do. What I want to see, obviously, you had a crazy move here. So I think you got to wait it out, let it breathe a little bit. The more so the stocks than the commodity. That's what I know you're interested in anyway. What I would do, Tree, I would just wait till next week, let OPEX get out of the way. And if we start seeing the sweeper activity that we've been seeing, that's your cue. That's your cue that these things are still in play, And like we said, it's more of a regime change than just a rotation we're seeing, Yeah, next week, just so you know why there's been so much flow in these energy stocks. Like if you look at open interest, you guys see some of these open interest positions. They're huge. So you don't know what's fresh buying or not. That's the problem. Like, for example, this name. Okay, this is uranium. It's not energy, but there was some decent action in it today. But if you look at open interest, you remember how much March call buying we saw in the CCJ? Remember all that call buying we were seeing? Yes, I still have a little, just the first piece I put on, Stephen. But I'm not selling it. I'm not selling it. I'm hoping to add to it. You know what I mean? I'm hoping to add to it. Because that's probably the month I'll be shooting for, if we do get our cue over the next couple of weeks. June, July-ish to start. So I'm hoping we're not too far away. Because again, if you look, and that's what pretty much Mike Wilson, he's saying the same thing. The price it resembles it a lot. But we're at a decent spot here. One of two things are going to happen. Like I said, you're going to either get, I think if you get that tactical squeeze, it might be a half decent one where we can make a little bit of money trading, especially names. Especially names. It's hard to see right now. Like you need some news to flip. You know what I mean? Like you'll need a ceasefire, right? You need something like that to take some of the weight off the credit markets. And then, you can probably have a tactical squeeze that we can benefit from. Otherwise, what happens is you get a nice day like today, but as soon as those spreads start to widen, that's it. Like, look at today, right? Like today was a solid day, right? Solid up day. What were we up? 90 on the ES? Yeah, 90. 400 on the NASDAQ. Okay. You look like it means nothing. Like, look at this. Look at this. We had a niner too. Today was a niner. Yeah, the TQQ figures in March calls, but that's all we wanted today anyhow, Panda, right? Because the Fed tomorrow. You don't want more than that now. So yeah, the setup is not awful. I kid you not. That's why I'm saying for anybody who wants to roll the dice, in a small way to catch a squeeze, wasn't a bad spot today. Because sentiments, we just looked at it. Sentiments really washed out. I just think there are larger forces at play. I think that's why we haven't squeezed already, to be quite honest. That's why we haven't squeezed already. Like, we talk about it ad nauseum this day. The credit markets rule all. You got credit spreads widening. I don't care what's going on. Equity prices can't go higher. They can't go higher. It's physically impossible. Right now you got the worst backdrop for upside to find any sort of footing. The worst right now, the worst. You got credit spreads widening and you got financial conditions tightening. Like, think about it. We had the complete opposite of that. This whole rally, the complete opposite. You get a lot of this. Maybe a couple days up if you're lucky, and then boom, right back down. So I don't know how long this can last like this before we see the pivot we want to see. Now that credit is participating, usually it doesn't take too long to get that capitulation, usually. And the same thing with like VIX, very similar to 2018. Remember we went over it where it just stayed elevated, but in a range? Just stays up here, comes in when the market rallies, but it stays up there. You don't get that complete washout. And then you get that final pop when there's capitulation. But, listen, you got an event tomorrow that can be a catalyst either way to accelerate things. That's good. Like, we usually hate these binary events. For where we're at right now, they're good. You know what I mean? They make things happen faster. The worst is you drip on no news. There's nothing. You know what I mean? That's the worst. That mechanical selling, that's the worst. And I'm still wondering, where are all the bodies? Are there any bodies out there? Where are all the bodies from all these things blowing up? Where are they? We don't hear about them. All I hear about is how Melvin Capital is down money. Where are they, HC? I don't understand. Even now with everything that's going on, there's got to be bodies out there, no? right, with credit and everything. And these commodity moves. Oh my God. Yeah. We're not hearing about them. It's weird. You know, when you start hearing about it, usually you're close to the end. Usually when you start hearing about them, yes, bonds too. Yeah, Eugene, there's got to be a shitload of them. You know what I mean? It's got to be a shitload. Yeah, so who was telling me, money has been so easy that, there's been so much liquidity out there that they get bailed out. Melvin got bailed out of that short thing, right? Cohen bailed him out. But, somebody else was mentioning, like, what about HC? What about these China names? What about like Tiger and all those guys? How did we hear about that? How? Where are these guys? They didn't blow up? Come on. Yeah, seriously. Damien, I didn't miss anything, right? I haven't heard a thing about any of these people. They had to do a debt raise, Tiger? I didn't even hear about that. I mean, you see that Chinese market and that Hang Seng in Hong Kong? You talk about crashes. You talk about crashes. Seriously. So, is that a shoe to drop? You know what I mean? But maybe we hear about it down the line. Yeah, so what McElliott's saying is that, he's saying a bunch of things. Today he was talking about how the game's broken, basically, because of dealers, of what they need to do to hedge. But prior to that, what he's talking about was, you got a big expiration here. More than likely, you're going to have a good amount of puts come off the books, and you should have a window where you see a tactical squeeze. But again, he keeps reminding you, he stresses the word tactical because of the Fed. You understand? Like, if you're a bull, you need things to get worse from here, not improve, for that Fed sell call debacle to get out of the way. You understand? Every rally is what he's stressing. Every rally is going to be capped. Every rally is going to be a tactical rally until things unravel. Until you get that Fed pivot. And again, we think the Fed pivot's far away, right? Because it looks far away because of inflation. But guys, you see how fast shit happens. You know how quick it happens if things really start to turn for the worse. I'm talking about globally, economically. You'll have inflation fall on its face. You'll have everything coming, and then the Fed cannot be hawkish. Cannot be hawkish. Because really the answer to all the Fed's problems is a recession. That's how sad it is. That's how sad it is. Really? Man, I don't know. I'm being honest. I don't know. Is that what they're doing? Jesus Christ. There are so many things going on out there. You know what I mean? So many things, especially off these sanctions and shit. I'm being honest with you guys. I don't even know the half of it. That's why I tell you, listen, I can pretend to be, some of these guys on FinTwit and have an answer for everything and pretend like I know everything. Okay. What I'm telling you a lot, and I'm not trying to make myself feel better. Nobody knows. You know what I mean? Nobody knows what happens, because All this shit, the majority of this shit's all new. It's new. Again, what usually happens, everything you guys are mentioning, what usually happens has an effect on risk assets, on equities, on economics, on credit, and then the Fed comes in or central banks come in and they soften the blow. You understand? That's the story, right? Prior to the point in time we're in now, if you asked anybody, they can give you an intelligent answer to when they think that point in time is going to be. You understand? The reason why nobody can give you a legitimate answer now is because this is new, right? Like supposedly this Fed or central banks in general, not just this Fed, they're going to ignore what they usually are concerned about and focus on inflation. That's why you hear the Fed boxed in. That's what they mean by that. But it's hard for a lot of us to buy it. It's hard to see. You understand? I understand if equity, I'm not talking about equities. Like equities, this market's been ridiculous. The Fed has no problem with equities cooling off for a bit. You know what I mean? Bear markets, corrections, it's part of the game. The Fed's not concerned about that. Like, look at this. Let the market come in. It's healthy. Flush out all those jarred farts players and everything else. That's a beautiful thing. But once it starts to have an impact on the credit markets, the Fed can't ignore it. You understand? Bernanke made the mistake in 2008 and played hardball and ignored it. And before you could blink, you had major banks going out of business. You understand? They played hardball. They let Lehman fail. You understand? They learned a big lesson in 08. Like, unless you want to blow up the whole shit, you can't ignore it. So all these guys that are talking tough on Twitter and all this shit, yeah, it's easier said than done. You're sitting home in your basement tweeting about it. If you're running the Fed and you're controlling money, you can't just allow shit to blow up. So where's that point? Where's that point? There's no track record. There's nothing, no past performance. Jarred farts, exactly. You got to flush those out. But you can look at when did the Fed step in? At what point? How wide were credit spreads when it stepped in late 18, in 08, in 2020 with COVID, right? So you could get an idea of when they start to get concerned. We're not there yet, but we're approaching. We're getting there. We're getting there. Again, and you see it in this stuff. All right, this looks a lot different than the S&P 500. So you're telling me you're going to have, the Fed raises rates hypothetically tomorrow and is hawkish, and then you have something like this, and they're going to ignore it? I find that hard to believe. All right, I find that hard to believe. Again, they thought Powell was the second coming of Volcker in late 2018. He was talking shit to the market gods. He was talking shit. He was talking shit. Like, he's not going to budge. And then before you know it, Mnuchin was making secret phone calls while sipping eggnog, and people were scrambling. And he pivoted so hard. You talking about a drastic pivot? He went from autopilot to not only we're not going to run off the balance sheet, we're going to ease. Right? That's what he called them, Mnuchin. Exactly. Calling the banks, listen, you're okay, right? You have enough liquidity, right? 8C, as crazy as the Trumpster was, I always felt a safety knowing Mnuchin was there with the markets. You know what I mean? You always knew like he was on top of things. He knew the game. I don't have that feeling with these guys here. That's why he has no hype. Yes, exactly. Exactly. He was the Mac Daddy. He was the Mac Daddy. Mnuchin was the Mac. So we're in interesting times. We're in interesting times. You know, and then you throw on top the beating and growth. But yeah, so in the meantime, you know, like a lot of your tree was asking to, this week is a tough week, you know, just try to day trade around the week. You want to roll the dice, try to catch a squeeze, or even, you know, playing a short, you're playing against the grain, but whatever it is, nice and easy, risk what you're willing to lose, buy some options, and case closed. But as we get through this week, right, we want to really, whatever the market's doing, we want to pay attention to the flow in individual names to see if we can get some clues to whether, you know, again, like we were saying, this is a new regime, right? There's new leadership out there, or, you know, maybe we see them come in and start banging some of these names down 50% off their highs. I'm not talking about skills either. I'm talking about, you know, legitimate growth names. But we haven't seen it at all to this point. When is that? I don't know. I don't follow that. When is that? Usually there's a couple of people, members, who bring it up. The end of the month? The end of the month. Oh, so speaking of the end of the month, there's also another catalyst for squeeze. You have huge rebalancing, bonds to equities. That should benefit equities, right? So that would most likely, you had the Fed this week. Otherwise, I'd say you probably look to see if they front run it starting now. But as we get into next week, I would look to that too. Yeah, I would look to that too. So you have the ingredients for a tactical squeeze. You definitely do. You definitely do. But so according to Kalanovich, anybody? Oh, here, I got it here. Hold on. I got it right here. 1 second. According to Kalanovich and the other dude over there, JP Morgan, there's a pretty decent size rebalancing. So you want to have the ideal setup, all right? Never happens, but I'll give you the ideal setup. You ready for this? Here's the ideal setup. Powell comes in like a hawk. Okay, Dubravko, that's him. That's who I was talking about, Dubravko. I keep forgetting his name. So what you call it? You have Powell come in tomorrow, raises rates. He's hawkish. Credit markets don't like it. Ends up spilling over into equity markets. We go from green to red, and we start a leg south, right? Let that go on for the rest of the week, or whatever the case. Now you get some capitulation. You get Sharpies, right? They pivot. So now we can front run. So you get this, rolls over, sells, capitulation, Sharpies, they come in. Okay. Now we have capitulation, Sharpies, and a big rebalance in a week or two. Okay, so we're ahead of that. Now you're cooking. That, by the way, that's late 2018. There was a huge rebalance too. That's what bottomed the pension fund rebalance. Oh, so here's the thing. I just posted. Hold on before I forget. But that would be the ideal setup, Tree. It is too good to be true. You're 100% right. But doesn't mean we can't dream, Brand. Why you got to rain on our parade? Here it is. Look. And then a ceasefire. Right, Q. Now you're talking. All right. So here is what he was talking about here. Get ready for the biggest investing shift away from bonds and into stocks since the start of the pandemic. Okay? Did you hear what I said there? The biggest investing shift away from bonds into stocks. That could boost global equity markets by as much as 10%. These guys are nuts. These are the dudes from JP Morgan, Kolonovich and Dubravko. Here, pension and sovereign wealth funds are poised to rebuild risk-armed positions that have fallen in between Russia invasion of Ukraine and rising inflation. But 230 billion of equity buying spree. Like, this is no joke. So as the first quarter draws to a close at the end of the March, institutional funds could deliver a much needed technical boost to global bourses. It's the biggest. Here's the Greek. This is the other guy. There's the trio: Dubravko, Kolonovich, and Pantagrozulu. I'm Greek too. I think he's Greek. It's the biggest rebalancing since 2020 in terms of buying equities. JP Morgan strategist, Nikki P. An inflow of at least 100 billion and as much as 230 billion could trigger gains between 5 and 10%. The rout that hit equities in March 2020 left real money portfolios underweight stocks by as much as 850 billion, sparking a buying base that helped deliver gains of 13%. I posted the whole note on this to private Twitter. I'll dig it up and repost it. Kolonovich talked about this too. This is the end of this month, March. In the biggest investment shift, pension and sovereign wealth funds. And, this is more than likely going to get front run. Yeah, he's been wrong. Well, he's been Tom Lee wrong, right? They're basically on the same page. He likes energy, he likes commodities, but the overall market stung him. Yeah. Well, those guys, that's what they do. You know what I mean? They always tell you to buy the dip. Very rarely those guys ever tell you not to buy the dip. Very rarely. The times usually, Mike Wilson, whatchamacallit, is more bearish than bullish, if you ask me. But he plays both ways. Kolonovich usually buys weakness and sells into, tells people to sell into euphoria, Kolonovich. And, most of the time he's right. You know what I mean, Jay? But times like this come up where it happens. Who, Mike? Mike Wilson? Oh, he's still bearish. He's still bared up. He posted, I think he's past that short-term balance, isn't he? I think he said it happened, or I could be wrong. Yeah, I think he changed his tune there, but I could be wrong. I think he said it was supposed to happen, and this is all we got. This was it. So now he's comparing exactly what we were looking at late 2018. He thinks we're right there. Where'd that come from? He thinks we're right here again. Right over here. So he was kind of looking for this. You know, so that was my interpretation. I could be wrong. Second row here, right? This. Yeah. So in other words, this, right? This was the rally, though. Look, when he said that, let me go that fast one. He said that here. You know, so this didn't get there. Right, exactly. He was expecting more out of this to 4,500. You know what I mean? Me too. I thought we'd get more upside there, but you know, the credit market started to crack. So I'm HC. I'm almost positive, but again, I didn't read his last note yesterday in depth, so I could be wrong. But that was my interpretation. That was my interpretation. So now, in other words, I think he, like we were saying, yeah, I think he thinks we're like right here now, and we could roll over. Where'd I post? Hold on. Oh, I got his chart here. Look, let's see. Hold on. He might have it marked off. I got his chart right here. Hold on. There it is. All right. Yeah, see? See, he was expecting more here. So now he's saying, what do we get here? We get a ceasefire. You might get a rally. Otherwise, you're getting that. And put early April. Oh, I keep thinking like April. April's right around the corner, you know? God, time flies. So, yep, that's the story there. Again, you know, it resembles it. It just, there's a lot of similarities to late 2018. You know, very similar. Yeah, the price action, you can draw any of these charts to look alike. But it does resemble it. It does resemble it. All right, that's it. What else? Anybody else got, again, all the other shit, guys, I would love to talk about and all. I don't think it's really, you know, we don't want to cloud our brains with too much that's not useful right now, you know? Small caps, I think we need to see what leads when we do bottom. You know, that's what I think. Once we bottom and get a rally, I think what leads will tell us a lot. What catches the flow, what catches the best price action. Have a good night, T. Get some rest. Who you need an NCAA pick? I saw a fishy line, Khalib. Okay. Maybe correct me if I'm wrong. Indiana is -4. Who are they playing? Who's Indiana playing? Wyoming. Yeah, I got to bet Wyoming. I'm going to take Wyoming plus the 4. Presley, it's a fishy line. No? Indiana's only -4 over Wyoming? Well, Indiana's a decent team, aren't they, this year? I've seen them play a couple times. They look pretty good. That's a fishy. Maybe they win by 2. They beat Purdue. That's right. Oh, man, I got to bet Wyoming tonight. Is that line 4? Maybe I'll get an extra point or 2 from the public betting them. Maldonado's the best player on the court for Wyoming. See? I didn't know that. So Wyoming's half decent, Khalib? They were good this year? Obviously, you know, I'm not following Wyoming too much. Really? That's tonight, right? What time is that game, Presley? 9:15. I'll take Wyoming plus the points. Listen, Presley, maybe Indiana wins by a bucket and they don't cover. Right? That could happen. All right, so this is the only other chart I got to show you guys that really means anything right now. Right? So this is credit default swaps, right? Credit spreads widening. This is a chart we've been looking at every day, every night. And as this pushes higher, there's just no way for equities to push higher. There's just no way. You understand? So you think about that, right? Like, unless you have something predictive that is signaling to you that this is going to break down, okay? Everything else we're looking at is basically meaningless. No? Basically meaningless. Like, I could look at the S&P 500 breaks 4,300. We're off to the races. It's a key level. I could think that all I want. If credit spreads widen that particular day, equities are headed south. You know what I mean? Now, again, that's not always the case when you're in normal market conditions, right? And they're not a concern. Markets can go higher when spreads widen a bit. Nobody cares. But when credit is on the forefront and on everybody's radar, especially the algos, every time you get this, you're going to get this. Right? Yeah, I mean, is it a coincidence? So what do you do about that? So what you got to do is treat this almost like you would treat a stock, right? You need this to break down, right? This is pretty obvious uptrend of higher lows, higher highs. Right? If this was a stock, you'd get long calls. It depends what, it's all different on every other, a lot of softwares, the Cdx Index, Charlie David X-ray Index. Others, you got to pull up the BOVA corporate bond spread shit, whatever it's called. Depends what you use to pull it up. Does anybody else have anything credit spreads? Any of the software programs we use, TradingView or Thinkorswim that have anything? Anybody know of anything? Yeah, anybody know anything on Thinkorswim? A symbol that tracks it? I don't. I've been looking. I can't find anything on it. But I'll dig around and see if I can find. But yeah, this is Ford. No, not really. Honestly, JD, there's nothing outside of commodities that's been seeing any real action. Nothing. It's been commodities, gold miners, energy, that sort of thing. You know, Freeport, FCX, those names. That's what they've been bombing for a few weeks now. Do you use API to get better quality data with TradingView? No, I don't. I don't. I've heard of it. I don't. Creditspreadalerts.com. Oh, that's a website outside. Is that I think I know that site. Credit Spread Alert. I think I know that site. But I think, if I'm not mistaken, they don't update it, do they? Let me see. Hold on. Credit Spread. Oh, Spread. I think I know this site. Hold on. What the hell? It's not coming up. What is it? Credit Spread Alerts? Is that the right credit? Oh, I spelled it wrong. I got it. Credit. Oh, still not good. What do I do now? Oh, there we go. Oh, yeah. I know this one. This is good too. I mean, sometimes it doesn't update it till the next day. But this is a good site. This breaks it down. This is good. Yeah. So this is this, if I'm not mistaken, this is the Cdx Index. That's what I was just looking at. And yeah, they break it down. See how they break it down? Yep. I think he's on Twitter, this guy, if I'm not mistaken. Oh, yeah. Follow us on Twitter. See? But this is it. Yeah, I think you get it updates the next morning. So tomorrow morning, it will update today's. I would love it on like TradingView or Thinkorswim or something. You know, probably Bloomberg Terminal or something we could get it on. But if anybody happens to dig anything up on TradingView or Thinkorswim, let me know. Yeah, and then I'll let you guys know if I find out. But I got the word out. You know, because I know there's one is the Bova BBB. But again, they're not live quotes. Sometimes they don't update. But I think it's Bova BBB. Let's see if I could get it on here. Yeah, this is it. End of the day. This is it, I think. So here it is. You guys got it? What's the symbol there? What the hell's the symbol? Here's, I gotta cut and paste that, hold on. This is for TradingView. Seriously. See, I got all my indicators on here. That's what makes it look so messy. But you see here, look, this was COVID. Look how insane, right? Crazy. 2008 was even crazier. Watch this. Yeah, look. Oh my God, I see it up there. This is 2008. Insanity. Yeah. So 2018, okay, is this. Right? That's 2018. Late 2018. Right? So look where we are now, right? This is 2018. And this is where we're at right here. Okay? So that's the point I'm trying to make. Like, we know this started to get the Fed's attention, right? We know this did. Right? Maybe they try to ignore it a little bit here. How much? But don't even look at 2008 because 2008 was a mistake. They fucked up. They didn't purposely, they didn't know any better then. Yeah, that's when Crayon was open up. What is it? Open up the damn window. Open up the damn. What was that Kramer line again when he's screaming, pounding? The Fed was playing hardball. You have no idea. You have no idea. These charts get stuck everywhere. All right. So there you go. You got something on TradingView. I forgot that I had this on TradingView. Does this update though? Maybe it doesn't update. That's why. March. Oh, it looks like it updates, right? Yeah, that's good. No problems. Yeah, this too, Fred. I have the app. This doesn't update, I don't think. Let me see. 3, 4. Oh, this one's updated. Maybe on the app it didn't update. We'll see if it updates. So when's it update tonight? Yeah, I'd like to know at least later on that day. I don't want to know that the next day. Sometimes they don't update. Who knows? But this is the same thing. This is the same thing as the one on TradingView. Oh. All right. So we got you're gonna hear about it. These spreads keep widening, you're gonna hear about it. You're gonna hear people panic. But yeah, this is this is the power right now over everything else. Now you get a break in it. It's possible you get a break in it. Like we were saying, ceasefire. But this sanction shit, throwing sanctions all over the place, not knowing these things have antennas, tentacles that go into a million different places. Nobody knows, the ramifications, the consequences that all this. So that's part of the problem. But we'll see. Listen, we have an action-packed day tomorrow. All right, some college hoops. Everybody's going to be waiting for Powell, what costume he comes out in. All right. So again, we enjoy it. Don't look to break the bank. Don't look to break your head. Nice and easy. I appreciate it, JD. Who? Man U. Oh, out of the Champions League. Man U. That's funny. He knew. Someone always knows, right? Yep, enjoy the games tonight, guys. And again, tomorrow, enjoy the day tomorrow. Nice and easy. Remember, it's only money. Have a good night, HC. Have a good night, everybody. Exactly, Presley. Exactly. Be good, guys. I'll see you tomorrow.